Hi everyone, and welcome to our first video update of 2025. I'm Dion Zakuski, Branch Manager, Portfolio Manager, and Senior Wealth Advisor from Scotia Wealth with you. And in the new year, we always get fresh optimism. In this edition, we're going to check out our scorecard from 2024, switch to what we're expecting this year, and then we're going to bring in our associate, Bond, to discuss contribution room in your tax-free savings accounts and RRSPs. So looking back at last year, it was a banner year for most portfolios out there. Market conditions were relatively calm, navigating through a US election circus, geopolitical issues, and high interest rates. Positive developments, such as corporate earnings, dropping inflation, and interest rate cuts, all paved the way for strong market performance. And we'll look at how world markets fared here. On average, most developed markets were in the double digits, with the US and Canada leading the way. Technology sectors were the biggest contributors, and were big components of our models the past couple of years as well. Hoping you weren't big into Latin American investing this year, we saw some steep declines. What about commodities, you ask? Well, this is really a mixed bag. Oil, which is measured by WTI, finished right where it started the year, around the $70 per barrel mark. Natural gas and gold both had strong moves. Our dollar weakened relative to the US greenback and will likely continue this trend into 2025. Bonds were mixed, with a modest return in most cases. So, we all enjoyed the love from the markets this past year. Will it continue into 2025? Pretty much every forecast we read, including Scotia's, predicts that it will. Bond even shook up our magic 8-ball, and it had all signs pointing to yes. To walk us through some of the important themes, I wanted to borrow a graphic from Scotiabank strategist Focus on 2025 report titled Climbing to New Heights, which we'll check out next. So this looks a bit like the old game from The Price is Right, but I may be dating myself here. Starting our journey to build on gains is the global easing cycle. Now this is fancy market speak for lowering interest rates. Assuming central banks continue to cut rates, this will make money cheaper for people to invest, companies to expand, etc., all positive for share growth. Our next green light is the economy. Recession risks, particularly in North America, remain low, and expansion is expected to continue. However, one major hazard that we are hearing about every day is US economic policy. As Trump takes office, his plans for tariffs are a cause for uncertainty, and the main reason January has seen market indexes bounce around. Keep in mind that this is also a negotiating tactic, but something to monitor closely as we continue our climb together. On the positive side, one of Trump's main platforms is tax cuts. Once again, more funds in accounts means more eligible investment and should widen profits. The flip side is the hazard of inflation. If you juice the economy too quickly, overheating can take place in areas such as housing, taking us back to where we were a few years ago, with inflation rising and then interest rates will have to move up again. Next up is the world's second largest economy, being China. Economic reforms and increased money supply are expected to have a positive upswing. The related danger here is if tensions break out into trade wars, causing more market uncertainty. Finally, we have continued growth in technology, particularly dealing with artificial intelligence. This is changing the world, and companies at the forefront will continue to see funds flow towards them, pushing markets such as the American NASDAQ to higher levels. Overall, from an asset allocation perspective, we believe that equities and alternative investments will once again outperform bonds, which will outperform cash, assuming that interest rates continue to decline. So I just painted a pretty rosy picture out there for you, but we know that markets do not always travel in straight lines. Using a coaching analogy, with my youngest son's U9 team, we're now learning how to play hockey on full ice. A big focus is not only on positioning, but playing what we call heads-up hockey. So with that in mind, as investors, what do we need to keep our heads up for in 2025? The largest risk by a long shot has to do with economic policy, particularly from the US. If numerous tariffs are implemented, we could see Europe, China, Mexico, Canada, and others retaliate, causing economic activity to contract. Next would be a return of inflation. As mentioned earlier, if growth happens too quickly, prices will rise, and the main control mechanism to pump the brakes is to raise interest rates. Debt loads are also worth mentioning, as well as geopolitical issues, which can always upset the apple cart. The final piece would be an extremely positive and strong consensus. I mentioned earlier in the video that apart from the permanent doomsayers out there, pretty much all forecasts have signs pointing to that yes. If everyone stands on the same side of the boat, it can be easier to tip over. Of course, here at the Zakuski Group, our job is to monitor closely and cut through the noise and find out what's really relevant for your portfolios and, more importantly, your goals in your wealth plan. This includes taking advantage of different types of accounts such as RSPs and tax-free savings accounts. And to learn more on this, let's bring in Bond.
Happy New Year. With the start of every year, we have a few exciting things to share. For 2025, you can contribute up to $7,000 to your tax-free savings account for this year. This brings your total contributor room, if you're eligible for the max, up to $102,000 per TFSA. As a reminder, if you made a withdrawal in previous years, you can re-contribute that amount in the following calendar year. For those of you making RSP contributions, it is 18% of your 2024 income, up to a max of $31,560. The deadline for this year's contributions is March 3rd. You can also contribute any unused RSP room from previous years for it to count on your count against your 2024 income. To view your TFSA and RSP room, you can use the CRA My Account feature on the CRA site. It's pretty easy to use. You can log in using the same information you would for internet banking. There is also a 1-800 number where they would ask you for your social insurance number, a PIN number if you have one, or your date of birth, as well as your income on your online $15,000 of your previous year's tax return. Please note, on the CRA site, there will be, or very likely is a lag between when a contribution is made and when it's reported to CRA. So if you want to make a TFSA or RSP contribution, please reach out to us and we'll double check what you've done in the previous year to avoid any over contributions. As always, if you have any questions or concerns, please feel free to reach out to our team. And have a great day, and thanks for watching.